Good day. Ira Epstein with your metal market update, and this recap, if you will, is for Monday, July 12th, 2021, just after 5 p.m. Central Time. So we're getting a little bit of a rally in the evening session in the metals. They tried to hold on today as best as they could. I'd be careful here. In looking at everything, what I'm watching is what's going to happen in bonds and notes tomorrow when we get the CPI number in the morning. They're looking for a 0.5 percentage point increase in June over May. So I'd be watching that, and a bigger number, obviously, on a yearly basis as you look at things. So be careful. Let the market get through that. I think it comes out 7:30 in the morning. On the energy markets, it's just back and forth. Market's trying to figure out what to do. We had the swing lines turned down in a number of areas there, but the market's still over key moving averages. And in the dollar, up a little bit, but foreign currencies tonight are also up. Markets are looking for direction, and they're not getting a big play on it. The weekly area chart of closes for gold, we're down 1/4 point roughly as the market's down from the Friday settlement. You're still over the 18-week average of 1801.60, and that's a bullish event. When you take a look at the chart action here and you take a look at where the swing lines are, you have no trend. You have a market that's got a higher high and a lower low. That is not a chart that is trending. The market is fighting a battle at both the 18-day average of closes in red and the 100-day in the green. And the 18-day got under the 100, but since price was over both, it has no bearing. You know, you'll hear death crosses and all these terms with the 50 and the 200. It's not as important in the 18 and the 100, but overall it is. Why is that? Let me explain what people don't get. When that occurs and you've got the 200-day here, you have a bearish setup. You've got the 18 under the 100 under the 200, and if price is under all three, it's quite bearish. Got it? The market is fighting a battle to not have that happen, but you keep your eye on that. When I take a look next at where the market's at in Bollinger Bands, they're crashing in on the market. So your resistance is coming in very quickly at 1813. The lower Bollinger Band supports 1757.80. Again, if you were to crash in under that 18-day average, under 1785, you could make a run at that lower number. It has not done it. It's not showing a sign that it's going to. And in addition, you'd still have a pattern of a higher high, lower low until more chart action happens, possibly tomorrow, which is tonight through tomorrow. You're overbought as can be. Not liking what I see here one way or the other on either side, but the bear side could get more down thrust to it if prices were to let go. Just because you're overbought, you'd have the bias down, but you would not have a downtrend. And there's a little more room between the 18-day average and the lower Bollinger Band than getting a rally here and starting to fight a pretty serious battle from 1806.90 to 1837 on the 200-day. In the gold-silver ratio, as long as it stays over the 18-day average of closes, it means that the bias is gold stronger than silver. Yet in the silver market, the market today threw out higher lows, higher high pattern. You're over the 18-day average, and momentum is not overbought. So the market for the first time threw out a buy condition. I don't like it for one reason, dollar risk. Let's assume you bought the market at 26.12.5, the 18-day average. Where are you going to put a stop? 25.80, 190, whatever there? You got a pretty big amount of risk at that point. So no, I'm not keen on the market there. And again, when you get Bollinger Bands narrowing in like this, what I tend to do is walk away from the marketplace. Let somebody else try to go nuts with that. Copper market. The copper market has a pattern of higher lows, but now lower highs. Momentum is sort of drifting sideways. The market is over both the 18 and the 100-day average. If it tries to rally, look for the resistance at 437.35. On breaks, it should have support at 426.90, and you don't want to get under the low that we had back here, which is this low of 423.25. That would do a lot more damage to the chart. Right now, the market's still looking okay to the upside and still, to me, in the bull camp. You're in the bull camp in the platinum, but overbought, knocking on the upper Bollinger Band. This is where I think the pros are going to take money off the table. You've got higher low, higher high into key resistance in an overbought condition. The palladium has been drifting sideways, but it's embedded. Yeah, let me show you this. This snuck out a quickie here. This was Thursday. Both numbers, as you can see, are over 80. This is Friday. And with today's action, you're there. So the market, as I see it, bullish until the red number closes under 79. Target 29.4620. I then look at the dollar index, and what you've really done here is you had lost the embedded reading. Now, if I take you here, when you lose it, right here, that often leads to price and the 18-day average coming together. The market started coming back down Friday for it, and guess what it did today? Did exactly what it should. But you have higher lows and a higher high, and you're still over the 18-day average. So the trend is up, the bias is up, the market has been coming down, and it's still in an overbought condition with a reading over 70. Until that number's away from 70, I don't think you're attracting fresh people doing a lot of support against that 18-day average. Just what I think. In Ethereum, again, the 100-day average, the upper Bollinger Band, if you were to rally, pretty stiff resistance, and the market's got a higher high, lower low pattern with momentum pointing down. Not seeing anything super friendly on that I like one way or the other. I want to remind you that each morning at 5:40 in the morning, I typically start recording. Now, I get up about 4:15, and I read like mad. I have my cup of coffee in the morning, and I'm reading, trying to see what's going on in Asia, Europe, what reports. I know from the night before what reports I'm looking for, but what reports might have come out that I don't know about in those markets, what's moving the marketplace, where do you go with it? And the rationale there is I want you to use me as your sounding board. You wake up, you might want to see what another person using charts and teaching charting and running a brokerage firm. You know, I'm not just a teacher. I run a good-sized brokerage firm. And on that, what do you do with it? Well, you sit back and you try to tell the people what you're seeing. I cover over 40 charts at a time for you, all these different categories. I cover them in both daily and weekly basis, and I devote a Saturday update to just the weekly for my paid subscribers. Is it expensive? It's a joke. I mean that. $7.95 for 30 days. In that 30-day period, you're going to get approximately 24 videos. And in those videos, each one's 15 to 20 minutes long. Now think about that. 5 videos, typically Monday through Friday, and then a weekend video for the weekly ones. Where are you going to get a price like that? If you decide to stay with it, you can go to $30 for 30 days each one after that, or buy a 1-year subscription. And it turns out for $156 for the year, you're done with it, no monthly billing, and it's $13 a month all paid up front. You decide. Go to our website to learn about it, at www.iraepstein.com, or call my staff. My brain is working faster today, having an allergy attack as I'm talking to you, at 866-973-2077. You have a good day. I'll see you tomorrow.